We've got a very interesting setup in markets, and Blake and I explore all the various thematics coming through. On one hand, if we focus on the corporate side, we've seen Walmart in the US coming out talking about some concerns around consumer consumption, hitting us at a time, of course, where we've seen some fragility in retail sales. And the market is a little bit concerned about the growth dynamics and consumption trends. Staying in the stock side, and on a more positive note, we've just seen Alibaba coming out with very, very good numbers, justifying the 50-60% rally we've seen there. They've talked about an explosion in demand for AI inference. And of course, what we've been seeing in the AI place in China is absolutely exceptional, and we explore all those thematics as well. Now, talking about momentum, we are seeing downside momentum coming through in the US dollar, and it's under pressure against all G10 currencies, certainly against the yen, and we explore that as well. We look ahead to next week, and we preview Nvidia's earnings, which of course could have huge ramifications, not just for the AI scene, but also the NASDAQ as well. Certainly, we look at gold, and there's a lot going on in financial markets. It's time to break it down in the trade-off. Well, hello, I'm Chris Weston, Head of Research here at Pepstone. We're joined in 2 seconds from my good friend and colleague for the show, Mr. Blake Morrow from Forex Analytics. Mr. Blake Morrow, would you come into the show? I apologise for my rather street attire. I've just done the kids' drop-off, came straight into the trade-off, been trading the morning. I guess this is sort of more representative of the other side of me, which is more on the sort of street side. But, you know, obviously you maintain the high standards. So apologies out there for letting the standards slip a little bit, but this is just feeling relaxed on this day today. So a lot going on. How you feeling?
You're looking good. You look like a trader, bro. I love it.
Oh, yes, I'm more on the crypto side, isn't it? But yeah. Step into the office and it's a professional world, but obviously when you're at home, you're getting it done. You're getting it done and trying to be relaxed. But anyway, here we go. Blake, mate, there's a lot going on in these markets. So you've just been out in Vegas, haven't you? You've just been out and talking about financial markets, talking about your trading in Vegas. I have no idea how anyone actually turns up at these presentations and gets the job done. You're a better man than I am.
I stayed sober the day before. So let's just, that's the easiest way to go about this. And you have to, you can play hard in Las Vegas, but you do it after you do a speaking event or a speaking engagement. But it was great. It was really wonderful being out there and meeting other traders and investors from around the globe. It's funny, people pop into Las Vegas, they, for these money shows, they hit a class here, an event there, and then they're gone. You know, they're off enjoying in Disney Playland. Yeah.
Yeah. So. Well, I love Vegas, but I always vowed never to go back. And then about a year later, you're sitting there with your mates going, "Oh, they're like, I've got to go back." But mate, you're obviously shows you the caliber of you getting asked to go and speak in Vegas. So well done. Anyway, let's go into topical thunder and let's discuss some of the big themes that we're talking about today. Yeah, well, Blake, we've got to start with the US dollar because we are seeing it weak. It's the weakest currency, G10 this year. Dollar yen's broken 150, euro dollar's 105, Aussie dollar's broken out of its trading range, looks strong. There's a whole number of reasons I'm seeing this. I think partly, you could argue last night we saw a little bit of a sell-off in a little bit of a bid coming through in US Treasury yields. Scott Bessent, the Treasury Secretary, has allayed some of the fears that we are going to see increased issuance at the long end going forward to fund the deficits and bits and pieces. He's still going to have a preference in the short term for issuing UST bills. I think that sort of suppressed the long end of the curve and created some dollar selling. But also you've got this exceptionalism story, which is not necessarily blowing up or unwinding at a rate not, but people are questioning this. I mean, you've got AI tech in China absolutely ripping at the moment and outperforming, and people want to move their capital out of a very concentrated position in the US into China and HK stocks. You got Walmart coming out last night with the cautious approach towards consumption patterns, backing up with what we saw in retail sales. And US growth looks like it's sort of slowing down at a time where China is getting stronger. We're seeing green shoots in their property space. Their credit data is certainly strong. We're sort of toying with the idea that perhaps we've reached trough growth in Europe and various factors, and that's mean reverting in terms of growth. So, there's a number of factors that we're seeing. Obviously, tariffs haven't been as bad as what people are positioned for and all those factors. But, with the US dollar down, I mean, are we chasing this lower? And what do you see as the sort of the primary driver for the US dollar underperformance here?
Chris, everything that you talked about, and even before we started filming, we were discussing Alibaba, and you were talking about the difference between Baba and Walmart, and I think that those two individual stocks show you the absolute collapse. Collapse maybe isn't the right word I want to use here, but convergence, if you will, of that U.S. exceptionalism story. Then don't forget, we have German elections upcoming. We have the Eurozone UK PMIs and the US PMIs. And if you remember last month, we saw European growth stabilizing. US growth is starting to show some signs of weakness. So are we going to get more of that even tomorrow as we head into a week where the dollar is really limping out on its back foot? I do want to say, though, technically, the dollar index is at 38% retracement of the entire move higher. So if it's going to stop, you would imagine it stops somewhere around here. But I don't know. The dollar looks pretty vulnerable. And don't forget, we do have an administration that is actively wanting to weaken 10-year yields, therefore the dollar. So I think the dollar could see some further pressure moving forward. One of the other things, I was just going to say one of the other things, Chris, that we should be paying attention to is just how the dollar closes this week. But you were going to say?
Well, so the other factor, of course, is the Trump brokered ceasefire agreement potentially in the working in the wings between, Putin and Zelensky, and has the euro and the outperformance in European equities got a little bit too optimistic about this? Because I think all the signs are that both want a deal. I mean, Zelensky doesn't want to give away half his minerals to Trump, but has the euro? I think has partly the move up to 105 has been contributed towards a better feel towards that. Have we got a bit optimistic about? I mean, no, I'm not a geopolitical expert by any means, but how much do you see this contributing towards the euro appreciation? And do you think we may be sort of setting ourselves up for a bit of failure here?
It could be another failure, but you know what I would expect it to see it out of, Chris, and I know we need to move along to the next topic, but is the Euro Swiss. And the Euro Swiss hasn't broken out to the upside. So I don't know how much that's factored into what's happening in the euro, the whole Russia-Ukraine situation. Sorry, it's late in the day for me.
Someone's had a bit too much fun in Vegas, haven't they?
I did get home. I just got home from Las Vegas, so we're gonna leave it at that. But let's move up to the next topic, Chris, because and I want to talk about risk. And I guess the question is, what risks do we got? I mean, volatility is low. The S&P is still well above 6,000. Dips are being bought. You saw this. You saw equity markets dip a little bit. Now, the German DAX, as you've been talking about it the last 2 weeks, finally, over the last couple of days, we are starting to see a little bit of pullback, but it's not broken by any stretch of the means. Chinese markets are looking a little bit better. As just pointed out, European markets look good. You look at the FTSE is stronger. Heck, even the CAC 40, the French markets are still very, very strong. And like I said, the U.S. equity markets, they're just shrugging. Volatility seems pretty low. What risks do you see in the market? Because it's hard to sit here and go, I should just be buying everything. The risk reward doesn't really match up at this point for me. But how do you see risk at this moment?
Well, it's pretty good, isn't it? I mean, we'll see what happens with Nvidia's earnings next week. We can talk about that in a second. But I think you look at the DAX. Yeah, we got up to 22,800. Yeah, we saw a bit of indecision, and then we saw 2 days ago we saw this big move down. Range expansion closed fairly close to lows, and we've seen a lower low on the back of that. So that tells me probably if you want to be really aggressive, we can go short the DAX for a quick move down. But I think that pullback is going to be fairly short lived. To answer your point, I think positioning is one thing. That if the market talks itself into more of a drawdown, that's one factor. I think probably the biggest risk, which doesn't play out overnight, obviously the biggest risk to markets would be, a proper slowdown in the US economy accompanied by another strong inflation print. That's not going to happen overnight. But that would be the biggest risk to me, would be that we see real further evidence of a consumption slowdown. Slightly.
We don't have to worry about tariffs for another month and a half.
Well, I mean, Trump's shown a strong hand to be commercial and negotiate, and I think clearly he's worried about the economy slowing down on the back of what he does, and it biting and shooting himself in the foot. And of course, he's got a pretty rock star, market friendly administration around him. If the US economy is gradually slowing, he doesn't want to catalyze that move in any kind of capacity. So I think tariffs would be, whilst they want to raise revenue in the American First program, and pay for some of the tax cuts coming through. We haven't heard those yet. At the same time, he also had a balancing act. If the US economy is going to slow down because of the immigration policies and various factors, he doesn't want to perpetuate that move in any way. So, but I think if you are going to see a 20% move down, it's going to come from some sort of shock to the system, which we don't know about, which I'm not even going to talk about. But really, it's something that's going to have to massively impact earnings, and that would have to come from a slowing US economy. So we're already seeing early signs of it. Whether it actually perpetuates into something bigger, we'll have to see. But I think a slowdown in growth and consumption with back with still very, very sticky inflation. I think that would be the biggest risk to markets. It's not going to happen overnight, if at all. But I think that's the risk. That's the big risk.
Very good.
Yeah, and it sort of plays into China AI, right? So because obviously what we saw from DeepSeek was on the 27th of January, the market, it's been around for a while, but the market sort of became quite familiar with it. It's this idea that you've got this company in China, which is producing inference. So it's training its data using the trained data on inference, and essentially using ASIC chips at a far cheaper rate. And that's pushed the inference side rather than the training side on AI really to the forefront. It's obviously come onto the administration in the US is radar as well. They're talking about export controls, and I think that's probably going to boost Nvidia's near-term earnings because a lot of these buyers out there have probably been front running a potential export control, and that's going to feed into better Hopper guidance, I think. But you've seen JVs, we've seen tie-ups in China tech. Alibaba, Tencent, they've all been coming out doing JVs and teaming up with other factors. And they've just been ripping. Alibaba's up 60% since those recent lows, and Tencent something similar as well. So what we've seen is just an explosion in international capital looking at these and going, shit, these guys are real. It's not just about Nvidia, Marvell, Broadcom, AMD. It's not just about them anymore. These are real challenges, and these are big plays. And they've just been sucking global capital up there, and it's been a massive move there. So I think that's a really interesting story. And obviously, we saw on Monday the private sector meeting between Xi Jinping, Jack Ma, and other factors. And that the last time we saw that, Blake, was in 2018, a meeting like this. And what came out afterwards was a 47% rally in the Chinese equity markets. So I think China's back. Whether it's a question to you now, can it keep going?
Well, of course it can keep going, Chris. But here's the thing: I'm a kind of a believer at this moment in time, and we talked about where the risks are. That I think money's chasing at this point in time, and everybody's looking for the next big story. And if it's not U.S. tech and the U.S. darlings, the Mag 7 and the AI plays there, where are we going to shift our money? And I have a feeling that this is kind of late stages psychology, if you will, into the markets. And I'm not saying that there's not more to go. I just don't know if I'd be chasing any of these plays at this stage in the game, knowing what the benchmark, being U.S. equities, what they've done, and what they've really kind of slowed down over the last 6 months or so. And you've seen a lot of these.
They've held up very well, though, isn't it?
They have.
This thesis that we're seeing global capital being sucked out of a concentrated US position. Well, we're just seeing Nvidia close the gap. We'll talk about that in a second. January 27. Marvell, Broadcom, they came out with very, very good, forward guidance about their players in inference going forward and the strategic investments, the capex from the hyperscales. Going to be up 40% this year. We're talking massive numbers from Google and from Meta, and that's still going to feed into US. So these stocks have held up very well. But there's money being put to work in China, probably a lot of nationalistic money in China. They're saying that everyone in China and Hong Kong loves and Asia love. They've all got a very personal relationship with Tencent and Alibaba. They use it every day, and then now it's flying up. There's probably a bit of a FOMO thing going on in local markets as well, right?
Right, and that's the thing I'm probably most worried about. And speaking of FOMO, Chris, I'm going to go to our last subject, and I want to talk a little bit about the yen. And is it time to buy the yen? Now, before you answer that question, I do want to say that last week, if you remember my play of the day, I was selling dollar yen above 153. It's dropped over three big figures, below 150 today. We closed at 149.50, and there's a lot of people talking about the yen now. And And a lot of people are attributing it to the rally in GGB yields. If you look at the divergence between the Japanese 10-year and the US 10-year, and you see that divergence, you'd say, well, naturally speaking, we should be buying yen. But the question is, do we buy it now? And has something really changed? My opinion is it has. But just like any trade and just like any market, just like what we were just discussing with Chinese AI, last week might have been the week to buy dollar yen. This week, I'm not saying that it can't go any lower or the yen can't go any higher, because a lot of these yen pairs, where you're looking at the Canadian yen, Aussie yen, Kiwi yen, even sterling yen, they're around some very, very critical levels of support. I am a buyer of yen on dips, meaning if the dollar yen rallied and we'd see a pullback in the yen, I would be a buyer of yen or seller of dollar yen, just because I know the 152 level is such a big pivot in the market. How are you going to play the yen from here after seeing such a big move over the last couple of weeks?
Well, yeah, well done on the play of the day. I was actually long gold in yen terms, and the trade's underwater a little bit there. It's not, certainly not anything too concerned, but I've taken that off. It's not working. I'd rather take a small loss and move on to something else. So yeah, that obviously, if you look at gold in dollar terms, that was the right trade, and obviously we're pushing to 29.50. So yeah, small loss on that, but obviously that's something that you deal with as a trader, and it's better to have a small loss than a big loss, of course. How am I trading the yen? Well, I think probably the best play for me at the moment is euro yen. I mean, you tend to do what's working best, and dollar yen is the one that's in free fall. So how do I play dollar yen at the moment? Well, I wouldn't be selling right now. Just wait for a little bit of retracement. But there's a strong underlying momentum to the downside in dollar yen, and the Bank of Japan would be fairly happy with that. The Trump administration would be fairly happy with that. So you're on the right side of both of their wants and needs, and it's falling. So I think I guess with dollar yen, the retracement higher is going to be pretty low, and people will be fairly quick to jump on it. So selling rallies, but the question is how high will those be? So euro yen's another one I like to sell. It's been working lower from around 161 to where we are about 157. I feel like there's still big risks in Europe that market's got a bit optimistic about. So I think euro yen's a good one. Certainly wouldn't be doing it against the Aussie. Or the Antipodeans, because China's still looking pretty good at the moment. But yeah, euro yen shorts, I like them down. Sell rallies. Dollar yen, I mean, that's been the trade at the moment, isn't it, really? So I think the interesting one is we do have Japan's national CPI numbers coming out, well, in about half an hour or so. And they are expected to push further higher. We've already seen those from the Tokyo numbers, which predate them. I think May's the next meeting for the Bank of Japan, which is kind of a live meeting in the market's pricing. So we'll have a look at those CPI numbers, the core numbers later today. That if they come out where the market's expecting them, which is stronger on the headline 4%, that could propel the idea that the Bank of Japan may be forced to move again. All I've got here, Blake, the other big factor in Japan is what a lot of people are trying to do is understand where the terminal pricing is for Bank of Japan policy. We're currently, the market's sort of pricing terminal Bank of Japan policy around 1.08 to 108 basis points. I think that's still mispriced. I think 1.5% is where I'd see that going. Again, over the medium term, I still think that's going to be a yen positive. So in a world where we're trying to understand where central banks could take rates, are they done? Could they take them lower? I think there's still upside risks in Japan's terminal pricing at the moment, which gives me.
So, Chris, I know we need to move along, but that would be that. Technically speaking, that's a huge breakout. When's the last time that the BOJ has been above 50? 0.50, 50 basis points.
Oh, I don't know. It'd be a bit of a while, wouldn't it?
Yeah.
But they're also doing QT. They're obviously they're not doing they're not buying bonds anymore, and that's a factor. But you've still got very low rates on a relative basis, and they've still got negative real rates on their 10-year. And so that needs to go. They don't deserve negative real rates, and so from that perspective, you've got that on your right side. So tactically, it makes a lot of sense. Technically, it's people are selling the yen crosses. So all the stars seem to be aligned. But selling rallies, wait for the retracement, get in. Anyway, let's move into the technicals. Let's go to that's a setup. Let's have a look at Aussie dollar. We obviously got the rate cuts on Tuesday. Both RBA Governor Bullock and her deputy Hauser have pretty much tried to tell the market, look, don't get excited about more cuts coming through. I don't think the market necessarily believes them. We're still sort of, the market's pricing the view that we're going to get another cut in May and another cut in December. But what we've seen, technically speaking, it doesn't really matter what's been priced into all the rates. I mean, the market's speaking out here. Obviously, got the break of the down. I love these structures. I love these structures where you've got this series of lower lows and lower highs, downtrend, and then we can consolidate. It trades in a range for a period of time, and that's a reasonable range to trade in. And then we've broken out topside. I just love that structure. I think it's one of my favourite ways of viewing the market there. So the market has categorically spoken up. It says we don't want to be in this range anymore. So this is a long position that I feel like has to happen. Now, of course, anyone who does breakout strategies will attest to that a lot of breakouts fail, but you've got to be in it to win it. And when these things kick, you just don't know how far they can go. The art of holding in a position like this, maybe use a systematic stop like an ATR trailing stop, or for a moving average crossover, or even just using 5 or 8 day moving average and just wait for the daily close below that. But when you got a breakout like this and with it closing on its high today, obviously maybe this is reflective of rates, maybe it's reflective of better China feel. I think that this market has told us how they feel. I mean, that's what I look at when I look at a chart. It's like, what's the statement the market's making? And the statement's telling us that they want to be in this range anymore. So, I think there's a long position here. It could fail, of course it could, but you use systematic stop, stay on emotional, and let it kick. Look for the distribution, look for the outlier in the distribution in this one.
Love it. I love false breakdowns. False breakdowns lead to breakouts, and that's exactly what we got here, Chris. What a big breakout. Like it.
Love it.
All right. So my first setup is going to be gold. It's interesting. Gold is flirting with this 161% extension. So the question is, does gold continue to fly, or is it time to go bye-bye? And hey, bye. All right. So bye. Is that a goodbye or a goodbye? Oh, well, anyway. Besson had an interview on Bloomberg today, and he was asked about gold reserves being revalued, and he's like, that's not what I was thinking and not what I was considering. And so the interesting thing is gold spiked up and then came right back down. Question is, do you chase it up here at channel resistance after such a huge and epic run this last year, or do you look to buy it on a dip? And me personally, Chris, I'd like to see it come back down towards 2,800. I don't know if I would short it necessarily, unless we get a break back below 2,880. But if we do break below 2,880, I think it does open up the door for a 2,800 test, and a move down to 2,800 would be a time that I buy it. But the flip side is, if it does break out to the upside, it could literally go parabolic. So I do think it is a good setup here. No matter which direction you want to trade it, I think it's about poised to move. I think
that idea that being floated around that we were going to see the US the gold reserves effectively revalued. I think they're putting there about, I think they're trading or put on the balance sheet about $42 or something.
Yeah.
So I think if they were to be marked to market at current prices, that would give the Fed something like 700 billion of additional liquidity, which would be like a massive liquidity boost to their balance sheet effectively. So that would have big until that would be a massive amount of QE also coming into the market. So the market might. So I think that was a situation floated that we're going to mark to market their reserves and holdings, and the Fed's balance sheet would just massively blow up as a result of that. So I thought that was quite an interesting one. I'm clearly not surprised he's decided not to do that. Anyway, let's go to Nvidia, because it will be getting obviously all consuming next week. They report in the aftermarket after hours on Wednesday, so just after the close. But I think when we were trading, we got down to about 113 beginning of February. Obviously, there's a lot of things the market was trying to digest at that time. What does DeepSeek mean for inference? Nvidia, who are obviously a GPU play, I've seen the market size as less of an inference play, and therefore you go into Marvell and Broadcom, who are obviously the big inference plays there. But I think the market's now got a little bit more comfortable that their GPUs are still the best in the business, and they can do inference and training very, very well. Obviously, with the DeepSeek news, there was concerns about controls, export controls from the Trump administration, and how that sort of feeds into their earnings going forward. Obviously, competition issues, people getting a bit concerned about the future capex cycle and how that plays in the video. Look, the bottom line is there was a lot of concerns. We got down to 113. A lot of those concerns have been overlooked now. People are feeling pretty good about the earnings next week, and we've obviously closed the gap up into 141. So that gap's been closed, obviously, and people. I think what's happened now is, 3 weeks ago, people were a bit concerned that they weren't going to meet their guidance. Their guidance is $37.5 billion for the current quarter, give or take 2%, and gross margins of 73.5%. And I think back then it was like, well, it's not. They're probably going to get them there and thereabouts, but we're obviously so used to them smashing their guidance that they are, there and thereabouts is probably not good enough. I think now the market is of the view that they're going to easily beat expectations. So they're probably going to get revenues for the quarter around 38.5 billion. They're going to guide for the next quarter ahead. The Q1 26 numbers are probably around 42 billion, and they should see pretty good gross margins, well, very good gross margins, but slightly better. So the market goes down to this very confident that they're going to beat expectations once again. They always do. It's a question of how much, and what does Blackwell ramp up look like, and how much is that going to make to their revenues going forward? So interesting one. But anyone who's trading the Nvidia stock next week, bear in mind that this stock has moved on average over the last 8 quarters around 9.2%, and the market's expecting or implying for this one around 7.5%. So volatility is assured. Trade it in our 24-hour CFDs aftermarket. Get them on, expect volatility, and that could really impact the NASDAQ after hours on Wednesday as well. So one to watch.
Sure will. And one of the great things about I wish I was not US based. I'd trade Pepperstone CFDs 24 hours a day too, just like PLTR, which is going to be my next setup, Chris. And what's interesting about this stock, and you notice my title here says he doesn't want it. Alex Karp, probably one of the more eccentric CEOs that you'll ever see on TV. I think it's his hair that does it. Anyway, he's filed to sell over, I believe, 6 months, $1 billion worth of his stock. And I'm all about CEOs wanting to lock in some profits, but $1 billion worth of your stock over the next 6 months, that hit PLTR. Then on top of that, the fact that they get a lot of their contracts are with U.S. governments, and Haggiseth is going to be the new security secretary. Did I say that correctly? Defense secretary. He is going to be. He's trying to cut a lot of these contracts with the government. That has people worried about PLTR. Anyway, the price action to me reminds me, and it's kind of reminiscent of SMCI back in the day. That over exuberance and then reversal. Keep an eye on PLTR. I think if we fill this gap, it's going to take us back to the mid 80s. We get below that 50 DMA, which is right at the breakout point. That's when I think longs get a little concerned about PLTR. But considering that you can trade PLTR as a CFD through Pepperstone, and you guys are all blessed here. That's why you guys are with Pepperstone and listen to Chris every day, right?
Well,
Chris?
I'll tell you what, when a man's willing to leave a country so that he can trade a certain stock, that person's passionate about trading.
That's right.
Yeah, well done, Blake. Anyway, let's go to play of the day. Okay, cool. Let's bring up EURAUD. I'll see if I can. So let's go. Right. So what we're seeing here, I like this one. Yeah, we got down to sort of 164. We had a bit of a bounce back up to 166.50 and EURAUD. I mean, I love the thematic here. I mean, Australia is not exactly an economy that's ripping at the moment. A lot of it's, most of the growth that we're seeing is from government spending, such as the labour market as well. And fiscal spending has been very strong. And obviously, we do have concerns around what happens over the election there as well. But right now, from a pure price action perspective in the setup, we're testing that recent February swing low. It's going to give way. I think that's where the probability lies for me. And so I like being short now. I like in very, very small size. I'm looking to add once we see that close below the 164, 160, the recent low. And then I'll be looking to, I'm not sure where it's going to go, but obviously I want to try and hold that down to a sort of 160. I think that's probably a level that you're going to be looking for those November lows there as well. So I think once the market's shown that it wants to break and close below that level, then I'm going to add and increase the conviction. So start small. If I'm wrong, I'm small, looking to take a loss and take that off on a close below above 164.70, just above that recent double sort of doji situation you've seen there. And yeah, so looking for the price to kick down lower, add and build the position as it goes down, probably get down to sort of 160, taking the loss above 160, 166 when the last two candles high. So that's the trade I like. I think this feels heavy, really feels like it's about to kick lower. Obviously, as I talked about before, I think the market's got a little bit too optimistic about what we're seeing in Europe. And, I still feel that there's a growing positivity around China's economy that we're seeing. And certainly, we go into March. On the 5th of March, we're going to have the NPC meeting in China. Probably going to see more on fiscal. So I like it tactically as well as what we're seeing technically there as well. I think this goes lower.
I love it how Chris talks trader talk to you guys, and he wants to add lower on momentum lower. And you know what? I'm going to follow suit with what Chris is saying, but in a different instrument. I'm going to look at the US dollar Swiss franc, and I love how we've developed this double top. I like how we have a bear flag pattern. I'm already short some dollar Swiss, but I'm actually looking to add to my exposure on a break below 89.50. And a move below 89.50 is going to take us almost down to the 200 DMA. I'm going to target initially to the 88.86 level, which is a 38% retracement. But I think it could even stretch its legs a little further. And this is great because just like what Chris is saying, if you're wrong, you know where you're wrong. I know where I'm wrong here. I'm wrong if it gets back above the 50 DMA. It's a very light yellow trend line that's capped us the last couple of days, that moving average. As long as it stays below the 50 DMA, I want to stay short. And if it breaks below that support, I'm adding. And that's what traders do. They add to conviction. And just as Chris was telling you about EURAUD, he wants to add lower on conviction. I want to add lower on this one on a breakdown, because then we have a double top. The double top plays into the bear flag. The bear flag plays into the double top, takes us down to 200 DMA, and on and on and on, and lower we go. Right, Chris? Right.
It's a probabilities game. It's all a probabilities game. So, if you make a view, you're making a view that the market's going to do something, that the collective wisdom in the market is going to do that. And as the market shows that your thesis becomes increasingly correct, you've got a higher probability skew, and you can increase the weighting. If it does against it, then, but yeah, really, all you're doing is you're looking at something and saying, what's the probability of an action? Yeah, and when those probabilities become skewed to a certain level, you can trade it. That's the way I feel you see it. So everything in life is a probability game. Everything in trading is a probability game. It's all about the probabilities. That's why I love options, Blake. That's why I love the options market. When I started getting into this game, the first thing I did, I was very much in the options market. And options just teach you purely about probabilities, deltas, and those factors. And you can combine that now very, very effectively, and that way of thinking into spot FX and into all types of trading. So it's just a probability game.
Love it, Chris. I love it.
Anyway, thank you, Blake. Thank you for coming from Vegas. Good to see you in shape and still smiling, and you've still got your eyebrows.
Yes, I do.
And thank you, everyone, for watching. Leave your comments down below. We hope you enjoy the show today, and we'll see you back more for next week on the trade-off.